I'm Emily Chang, and this is Bloomberg Technology. Coming up, Netflix CEO Reed Hastings sees trouble ahead in China. We'll break down his comments that sent shares plunging. Plus, a comment from Oracle puts its $9 billion deal in doubt. What does it mean for the future of Netsuite? And the U.S. officially points the finger at Russia for hackings meant to meddle with the presidential election. We'll wrap the week in cybersecurity with the CEO of Cloudflare. But first, to our lead. The CEO of Netflix admits the company's entry into China doesn't look likely. Reed Hastings told the audience at the New Yorker Tech Fest, saying, quote, Disney, who is very good in China, had their movie service shut down. Apple, who is very good in China, had their movie service closed down. It doesn't look good. These comments came during a volatile week for the stock. Shares recovered from a 5% dip in early trading Friday. On Thursday, they'd slid over 8% on concerns that Hastings would have trouble replicating his U.S. success throughout the world. And Tuesday, shares popped on speculation the company is a takeover target. Joining us now from L.A., Bloomberg's Chris Palmieri. So, Chris, first of all, let's talk about these comments about China. How significant are they? How much of an impact will this have on the company?
It's significant. I mean, China was the last big market that Netflix had in its quest for global domination of the online TV business. And so to see the CEO say it's not going to happen anytime soon is a disappointment. But in some degree, as he noted, a lot of other companies have been shut out of that market as well. So it's not exactly totally unexpected.
Exactly. I mean, so many U.S. technology companies have tried and failed. In China, you have some media companies having some success there. But, to what then do you attribute the volatility in the stock?
Well, I mean, Netflix is the darling of the media business these days. I mean, it's a $45 billion market cap company. To put that in perspective, that's the same as 21st Century Fox. It's almost as big as Time Warner. So there's a lot of hope and anticipation built into that stock, and anything that's a disappointment sends it up or down pretty quickly.
Do you think Netflix is a takeover target?
We saw those rumors earlier this week. We worked really hard to see if there was any truth to it, and we haven't found anything. It would just be such a tough pill for anybody to swallow. I mean, it's a price-earnings ratio of over 300 times. The S&P 500 is about 20 times. So any company that's going to buy them is going to have to give up a lot of equity to make that happen.
And there's still, Netflix playing a very long-term game, spending billions of dollars on original content, and we don't know yet if it will pay off. I mean, is there any progress on the sustainability of the overall business model?
Well, Reed Hastings has made clear that his view is that he is going to get as many subscribers through this big push into premium content and roll it out all around the world, and he's willing to sacrifice short-term earnings to accomplish that. And so far, mostly, he's been accomplishing it. His goals, the subscriber counts are phenomenal, and everybody in the media business is trying to figure out Time Warner, CBS, Disney, some sort of monthly subscription online video option that looks like it's going to replace the cable TV package.
Now, something else that came up at this New Yorker conference, it sounds a little bit like he's picking a fight with theater owners. What do you make of that?
Well, this is another dynamic with Netflix. They want to invest in movies, and they want to win Oscars. And in order to do that, you have to have a movie released in theaters. So they cut a deal this week with a small luxury theater chain called iPix, and that would allow them to put their movies in theaters and simultaneously put it up on the Netflix streaming service. The theater owners don't like this. They've lived by this exclusive window that they have where movies are just shown in theaters, and if you want to see them, you've got to get out of your house and pay. So this is an ongoing fight, and but like all disruptors, Netflix seems to be winning.
All right, Chris Palmieri, our Bloomberg News LA Bureau Chief. Thanks so much, Chris, for weighing in there. We'll keep our eye on the stock. Oracle's final extension for approval of the Netsuite deal. Shareholders now have until November 4th to approve the acquisition. Shares of Netsuite dipped as much as 5% in trading. The extension coming after only receiving less than a quarter of the shares necessary to close the $9.3 billion deal. Netsuite's largest shareholder, T. Rowe Price, has expressed concern that Oracle's offer of $109 a share undervalues the company. This according to reports. Joining us now from New York, Mandeep Singh of Bloomberg Intelligence. So, Mandeep, what do you make of the fact that shareholders just don't seem to be on board yet?
Yeah, Emily, so in this case, what you're seeing now is T. Rowe basically trying to get a higher price for Netsuite. And the reason is the recent deals, if you see Microsoft, LinkedIn, Salesforce, Demandware, these were approximately 10 times sales. So I don't see how you can, pay a higher price. And who is going to pay it? So the shareholders are demanding it, but there is no other likely bidder who's going to bid greater than 10 times sales for Netsuite. And the breakup clause in this case, Netsuite will end up paying $300 million if the deal doesn't go through. So if you look at their standalone prospects as an independent company, I mean, they are growing 30%. I don't see how it's going to be a better off thing for Netsuite if this deal falls apart, and given there is an unlikely bidder apart from Oracle.
So what would you say the likelihood is at this point of this actually happening?
So I think given Larry Ellison has a 47% stake and insiders have a 5% stake, and they did put in a clause that they require the deal to be approved by majority of stakeholders outside of these two stakes. So I think what Larry has to do, or someone from Oracle's board, has to really kind of basically negotiate the terms. Probably, maybe there could be a slight increment in the deal value given, if you look historically, SAP paid 11 times for Concur. They paid, 11 times for SuccessFactors, which was done in 2011. So maybe there is room to kind of, increase the deal by maybe a few millions, few hundred million. So that is a likely option that the Oracle's board can negotiate at this point. But other than that, I don't see any other option for NetSuite. There is not going to be a Microsoft or an IBM bidding for NetSuite. That's very unlikely.
And on the Oracle side, if this doesn't happen, how bad would it be for them?
They currently generate 10%, a little less than 10% of their overall revenues from cloud, and more than 50% of their revenues from acquisitions. So if this deal falls apart, that kind of puts them behind. They are already behind in cloud revenue. So they kind of need NetSuite to prop up that cloud revenue. And so they will have to find something else to buy, or I don't see them, growing that fast organically. So it's kind of a win-win for both of them, but it's really about the price. And at this point, I think someone from Oracle's board, who is negotiating the deal, really needs to come into play here.
All right, Mandeep Singh of Bloomberg Intelligence. We'll see what happens next week. Well, Microsoft is holding an event in New York, October 26, to unveil its plans for Windows 10. The operating system is at the heart of CEO Satya Nadella's vision of building an ecosystem of cloud-based services and devices that work together, much the same way that Apple and Google's products do. Microsoft initially wanted to install Windows 10 on 1 billion devices by 2018, but the company recently admitted it'll take longer to reach that goal. Coming up, the U.S. accuses Russia of interfering with its elections. This just days after Yahoo's email scanning program came to light. We'll talk cybersecurity with the CEO of Cloudflare, Matthew Prince, next. And later this hour, we'll sit down with a VC who turned a $10 million investment into $1 billion thanks to a splashy software IPO. Ravi Mehta of Lightspeed Venture Partners is our guest. This is Bloomberg. The U.S. saying for the first time that the Russian government has used hack attacks to interfere with the presidential election. The Office of the Director of National Intelligence and Department of Homeland Security said in a statement, these thefts and disclosures are intended to interfere with the U.S. election process. We believe, based on the scope and sensitivity of these efforts, that only Russia's senior-most officials could have authorized these activities. Officials wouldn't confirm if the Russian government has also targeted state election systems. These latest revelations come just days after Reuters reported that Yahoo secretly built a software program that would let the company scan all of its customers' incoming emails for specific information wanted by U.S. intelligence officials. Here now to help us break it all down, Cloudflare CEO Matthew Prince joins me here in the studio. Cloudflare helps content move across the internet, providing security and domain name server services. Matthew, thank you so much for joining us. Great to have you back here on the show.
Thanks for having me.
So you've been in discussions at the highest levels. Folks in Washington have invited you, along with Sheryl Sandberg and Tim Cook, to talk about where we draw the line between privacy and security. Where do you think we draw the line?
Well, I think that, at Cloudflare, we think it's really critical to protect our customers from hacking, from any of the types of activities that, whether it's hacking from the Russian government or hacking from the U.S. government. And so, I think that our duty is to really protect our customers. And, I think that we still have to have a respect for what the law enforcement in Washington has to do, which is tackle the challenges of, basic criminals online, cyber criminals, ISIS and other terrorist groups. And so what I think has been really encouraging is that we've seen an increase in the amount of dialogue that's happening between Washington and technology companies, and that's encouraging.
But is Washington overstepping their bounds? What do you make of this report from Reuters that Yahoo let the government scan emails?
Well, I think that there's a lot of details that we still need on exactly what was going on there. What we see is, by and large, that there is an attempt to actually have a dialogue between Washington and technology companies. But every once in a while, there are law enforcement requests that companies like Cloudflare or Google or Facebook or others get, which do seem to overstep that. And I think that one of the duties that we have as the private sector is to actually hold the government accountable to that. And we've done that in our business. And I think that Google and others have done that and should continue to fight for our users.
From what you've heard, do you question the way that Yahoo reportedly handled this? Or, did they make a difficult decision?
It feels like a story which is developing. When initially the reports were that they were using their anti-spam systems to look for some sort of signature, that seemed less like that seemed something like they could do that wasn't nearly as much of a violation of their users' trust. The stories that started to come out this afternoon that maybe it was actually a rootkit that was gone in to compromise the actual Yahoo servers, that does feel like it's something that has gone beyond the pale. But what I think is really important is that companies are just extremely transparent, that they disclose what they're doing, that they make their users aware of what's going on, and these types of clandestine efforts behind the scenes almost always seem to get exposed. The consequences are significant. In Yahoo's case, this combined with the hacking incident sounds like it might decrease their value by over $1 billion if Verizon gets their way.
Right.
And there's that really puts a real cost on not taking cybersecurity seriously.
That price change is a report from the New York Post that we have yet to confirm. You guys just launched 3 new features that will further increase the reach and speed of the encrypted web. And this is part of your broader mission. And I wonder how much of the web should be encrypted. And is there a danger that bad actors could take advantage of that?
Well, I think all of the web should be encrypted. And as content is flowing across the network, you shouldn't have people who are running those networks be able to get in and interfere with that content, whether that's someone who's trying to steal your credit card information sitting next to you in a coffee shop, whether that's your cable company that wants to market advertising to you, whether that's the National Security Agency. As content passes across the network, I guess we see it as we're sort of crypto absolutists, where the entire internet should be encrypted. And what's important is that the next standards for the internet all start from a basis of encryption. And so I think it's inevitable that we're headed in a direction of a more and more encrypted internet. And at Cloudflare, we're really proud of what we've done to bring encryption to the masses.
And by the way, you're hearing the Blue Angels fly over the studio here. It's Fleet Week in San Francisco. How much of the web is encrypted right now? And what would it take to encrypt the entire web?
Well, so at Cloudflare, we see about 10% of all internet requests, and we made it 2 years ago so that every single one of those requests could be actually over an encrypted connection. Now, not everyone takes advantage of that, but we see more and more and more of our customers taking advantage of that. I think one of the biggest challenges is that oftentimes, especially organizations that are based on advertising, so Bloomberg, the New York Times, the Washington Post, Wired, have written about how difficult it is, because a website isn't just something that you control yourself. Third-party resources come in from advertisers and other places. And so that's one of the things at Cloudflare that we did, was we said, how can we solve that problem? How can we make it so that even if there are resources that are loaded from other places, that we will not have potentially unencrypted content mixed with encrypted content? And we think that our role is to make that as easy as possible, and that what encryption really needs is, we've done a lot with the math, but we need to do a lot more with the UI of making it really easy and really affordable.
So what's your take on this report that the U.S. government coming out and saying, now we know that Russia hacked the U.S. election, and only the topmost officials in Russia could have authorized this?
I don't have access to all of the intelligence that the U.S. government has, but I'm often skeptical of some of these reports of attribution to nation-state actors.
Really?
Yeah, I think that sometimes that happens, but a lot of times there's a blurred line between a patriotic hacker who might be a 15-year-old kid acting on their own behalf, and a real state-sponsored activity that is sanctioned. I think we've seen a little bit more of that out of China in particular, where there have been reports on the government supporting specific hacking groups. I think Russia has been, in our experience, a little bit more ad hoc. That doesn't mean that the government doesn't approve of what's happened. That doesn't mean that they might not have even co-opted this, but a lot of times, the damage that can be done by a really determined 15-year-old kid who wants to make a name for themselves is as much as what a nation-state actor can do on their own.
Interesting. On that note, last question. We've been reporting about this Booz Allen employee that was assigned to the NSA and reportedly took a bunch of documents, classified documents. It's curious to me that an employee is even able to do that in this day and age, especially post-Snowden.
Well, Snowden was a Booz Allen employee as well.
Exactly. So you would think that the NSA would be more careful, right?
It's tricky, though. I mean, if you have a document, at some point it has to be on a screen, and you can take a picture of the screen, and how you control access to that information is a real challenge. And I think while there are a lot of threats that companies worry about from outside, you should pay equal attention to the security threats from insiders as well. And so internally at Cloudflare, we've designed a number of systems to make sure that you have to have two-man rules, that you have to have multiple people approve changes. And I think that's something that we had the luxury of doing, because we got to start in the last 6 years, where if you're at Booz Allen, if you're at the NSA, if you're at these organizations that have been around a lot longer and have a lot larger scale, that risk is ever present, and I don't think it's going to go away.
All right, interesting. Matthew Prince, CEO of Cloudflare, thanks so much for joining us and breaking down some of these very complicated topics. I appreciate it. Coming up, pressure is mounting on Germany's most famous startup factory to churn out another hit. We'll head to Berlin for a look at what's going on at Rocket Internet next. This is Bloomberg. Rocket Internet is known for churning out copycat startups that follow U.S. companies. And while founder Oliver Samwer maintains the company's in great shape, investors have doubts. Bloomberg's Stefan Nicola has this report from Berlin.
While Rocket and its charismatic CEO Oliver Samwer has had a huge early success with Zalando, now one of Europe's biggest fashion retailers, Samwer hasn't had many success recently. You know, he hasn't managed to pull off many exits or turn some of his other startups into profit machines. And that's why investors are starting to get a little impatient, and you can see that in the stock price, which has dropped about 50% since the company IPO'd in Frankfurt 2 years ago. Why is Rocket struggling to take off? Well, some of our sources have told us that Rocket is not compensating its key employees and startup founders with enough equity or shares, so that it has lost a lot of key people over the past years. Oliver Samwer has told us in an interview that he doesn't see the churn as a big problem, and he doesn't feel that it's unusually high. He says Rocket is in great shape with 1.7 billion euros in cash, a great network of 30,000 startup workers around the globe he can tap into, and still a lot of expertise building and ramping up companies. That said, he has also repeatedly said that it takes 6 to 9 years for an e-commerce startup to swing to profit, and he has promised that he will take 3 of his startups to profits by the end of next year. Now, Samwer will have to work hard in the next month to do that, to achieve that, and to prove his critics wrong. But he will also have to work hard to convince his investors to remain patient in the meantime.
That was Bloomberg's Stefan Nicola in Berlin. Coming up, with a string of software IPOs getting good reception on Wall Street, is it time for other tech unicorns to take the plunge? We will discuss. And a reminder, check out our newly redesigned website covering all the latest developments in global tech from around the world. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with a check of first word news. Quinnipiac University's latest national election poll has Hillary Clinton ahead of Donald Trump by 5 percentage points. Clinton's 45 to 40% lead in the survey comes just 2 weeks after an earlier poll found she was neck and neck with Trump among likely voters. Libertarian Party candidate Gary Johnson has 6% of voters surveyed. The Green Party's Jill Stein has 3%. Republican presidential nominee Donald Trump is apologizing for lewd comments he made about women back in 2005. The Washington Post obtained a video of Trump and Billy Bush, then with Access Hollywood, on a bus. The tape includes audio of their conversation. In a statement, Trump said, quote, "Bill Clinton has said far worse to me on the golf course, not even close," end quote. Hillary Clinton's campaign tweeted, quote, "This is horrific. We cannot allow this man to become president." Hoping to lead by example, President Obama today used a return to his hometown of Chicago to cast an early ballot for the November election. He's been encouraging people in speeches and radio interviews to register and get to the polls. The president voted after attending a fundraiser for Democratic House candidates. Russia says it will veto a French-drafted UN resolution Saturday calling for a ceasefire in the Syrian city of Aleppo and the grounding of all aircraft, including Moscow's. Russian Ambassador Vitaly Churkin said it's, quote, "unprecedented the Security Council would ask a permanent member to limit its activities."
I cannot possibly see how we can let this resolution pass. I cannot possibly see. And to me, the most upsetting thing about it is that, as I say, there are other ways of doing it.
Ambassador Churkin says the Security Council should instead support a proposal from the UN's Syria envoy, Staffan de Mistura. It calls for an al-Qaeda-linked group to leave Aleppo in exchange for a halt to Russian and Syrian government bombardment. U.S. Secretary of State John Kerry says Russia and Syria should face a war crimes investigation for their attacks on civilians.
This is a targeted strategy to terrorize civilians and to kill anybody and everybody who is in the way of their military objectives.
Secretary Kerry says Russia and Syria owe the world, quote, more than an explanation about why they keep hitting hospitals. Meantime, Russia's weighing a potential return to former Soviet-era bases in Cuba and Vietnam. That's according to a defense official who told lawmakers in Moscow Friday the military will revisit the decision to withdraw from the two countries more than a decade ago. And U.S. Marines are in Haiti to assist in humanitarian efforts in the wake of Hurricane Matthew. They're from Joint Task Force Matthew from the Southern Command. I'm Mark Crumpton.
This is Bloomberg Technology. I'm Emily Chang. IPOs in the last 2 weeks have shown that appetite for tech listings is still alive and well, even if not for other industries. This week, software maker Coupa surged more than 100% in its trading debut. It raised more than $130 million after selling shares at the top of the market range. Last week, we saw a similar story from another software maker, Nutanix. It also more than doubled in its trading debut, raising $238 million. Our next guest led that company's first institutional investment. Ravi Matre from Lightspeed Venture Partners joins me now here in the studio for more on tech funding in both the public and private markets. And I have to say, first off, you wrote a $10 million check, which likely will lead to a $1 billion payoff. So it was a great week for you. What do you think the positive reception to Nutanix means for IPOs more broadly, tech IPOs more broadly?
Yeah, I think that really Nutanix and Coupa, these companies are ones that have built really strong businesses. They really are heralding a new generation of technologies that businesses use to run their enterprises. And the market has really got an appetite to see these companies go public and invest in what they see as the future of computing technology for businesses.
And Nutanix competes with Amazon, and you believe that Amazon only has a small piece of what's going to be
That's
$1 trillion
exactly right.
market. Explain this.
Enterprise computing technology is a $1.5 trillion industry today. Amazon in 2015 did about $8 billion of services from their cloud computing business units. Their largest and fastest growing business unit, but we're talking about $8 billion out of $1.5 trillion. And so I feel like they've been a terrific evangelist and just overall educating people about the possibility of taking all of these physical boxes that live in companies' data centers and moving them into the cloud. And you can do that with simpler applications and websites. Companies like Nutanix are building platforms so that when you really have an industrial strength computing job, ERP application, or something that runs the books of an enterprise, and it really needs to be reliable and have a high service level, Nutanix is providing a platform that lets you put those kinds of things into the cloud. And
now, shares are up now 138%. I get that a pop is nice.
Yes.
That's a big pop. And I wonder, you know, on the one sense, that means the company left a lot of money on the table. On the other sense, you know, did bankers and investors not tell the right story and get the right story? Did they not understand that this was going to happen? What do you make of that?
Well, I think that's a great question. Usually when we take a company to the market, we like to think about what a reasonable value will be that investors would say based on the current revenues and current margins of the company in a normalized environment is a value that makes sense. And so we use a lot of those metrics along with our banking partners to figure out where to price an IPO. I think what you're seeing in a case of a company like Nutanix, and as you said before, there's been relatively few offerings. There's such enthusiasm for these companies that represent the future of computing for businesses that every once in a while you'll have this phenomenon where a company's narrative is really strong. There's a lot of investor excitement. There just aren't that many other ways that an investor in the public markets can get access to companies that represent this tectonic shift. And so you see sort of prices run up in the way they have for a company like Nutanix.
It's shaping up to be an exciting year for you. You've got a couple of other companies potentially in the pipeline, AppDynamics, MuleSoft. Do you see them going out this year? And what do you see for tech IPOs more broadly? Do you think the success of Nutanix and Coupa will get more companies out of the gate?
Yeah, I think that's a great observation. I do think these companies are a catalyst and really a wake-up call that let public investors know that this wave of companies that bring the next generation of computing to the enterprise are, they're getting to a point of maturity where there's real revenues, there's real customers, and they're at a size where the public markets can invest in them. And so, yeah, I think they've broken the ice. And AppDynamics, MuleSoft are also companies that have very substantial businesses in the hundreds of millions and are growing and will likely tap into the public markets, given what we've seen either later this year or early next year.
Do you think the political environment is the uncertainty around the election? Is that holding anyone back at this point?
To date, it hasn't. We are watching it closely. There's always a possibility that market conditions could change, but if I could predict that, I might be in a different business and not in venture capital.
You've also got another big windfall potentially coming next year. We've reported that Snapchat is looking to go public or file paperwork as early as March of next year. I know you can't speak specifically to the timing, but Lightspeed was the first institutional investor in Snapchat. What do you think about the potential of this company? It seems a little bit early. Obviously, it's the cool thing right now, but why now and how big can it get?
We're super excited about Snapchat, obviously, given that we were the original investor. We think Evan he's a genius when it comes to thinking about new products that really resonate with a consumer audience. The way we think about the potential for Snapchat, it really is a platform, a medium that lets people communicate and tell stories with pictures and videos, and that's been something that really there hasn't been a native platform on mobile that does that well before. And so what we're seeing is the younger generations are using it voraciously, and it's really sort of spreading. We think that it's a phenomenon that could be as big as some of the other social media platforms that have succeeded on a grand scale. I think in the long term, there's no reason why the market potential for what Snapchat does couldn't be as big as Facebook's.
And one last question, VCs have raised a record amount of money. You guys have two funds. You raised two new funds this year, totaling $1.2 billion. Again, those are the Blue Angels practicing over our studio. Investors, though, have had trouble finding good companies to back. The belt has been tighter. Do you think that the optimism that we're seeing around tech in the public markets will loosen the belt a little? Are you seeing good things out there again?
Yeah, that's a point that we talk about a lot inside our partnership. At the early stage, which is where Lightspeed typically gets involved, we're usually identifying founders, like the founders of Nutanix 7 years ago, when it's a handful of people and an idea for how to change an industry. There's a steady stream of those ideas. We're super excited. We think that we call it the innovation cycle. The aperture for technology to affect and change industries is bigger than it's ever been before. I mean, that can be taxis with Uber. It can be the cloud with Nutanix. It can be, you know, Snapchat for people taking videos and images on your smartphone. It's a huge opportunity set. So the early stage market, it continues to be strong. I think what we're feeling about the later stage markets is that there's been a slowdown in some of the investment activity. There has been a lot of capital that has come in. I think they see that, you know, companies like a Nutanix or a Coupa can go public, and that creates a lot of enthusiasm where people want to get returns in the technology sector. But we think over time that will also normalize, given that there's still a steady stream of these early opportunities. As they mature, they'll need more capital. And so, you know, our belief is that the capital that's flowing in will generally be able to get put to work in an effective way.
All right. Ravi Matre, partner at Lightspeed Ventures and the first investor in Nutanix. Thank you so much for joining us.
Thank you for having me on the show.
Great to have you. Staying with Snapchat, the Wall Street Journal also adds that Snapchat may fetch a value of at least $25 billion in its IPO. Our Bloomberg Intelligence senior analyst, Jitendra Rawal, joins me now from the newsroom with more. Jitendra, you've been doing some work on the numbers that we have. How feasible is a $25 billion market cap for Snapchat?
Well, firstly, if you look at the user growth, it has been robust. I mean, you're talking about more than 40% growth every single month for the last couple of months. So if you sort of marry that with the engagement they're getting from advertisers and the expectations they have for revenues, if they can crack about $1.3 billion in revenue next year, you apply Facebook's multiple to that, it is feasible mathematically.
So how are they making money currently? Obviously, the majority of it is coming from advertising, but how?
So one is the conventional. You have video ads, and the vertical video ads and stories, and henceforth the other is like you have lenses and geo filters. I mean, that's where the strength is emerging to be really location-based advertising, because people are using Snapchat, you know, almost all the time. Like, and if you could sort of marry that location-based strength to a local business spending, so that's a strength that they can explore, especially when it comes to the youth.
Ravi Matre of Lightspeed, one of the earliest institutional investor in Snapchat, just said he thinks it could be as big as Facebook. Would you agree?
Well, it'll take them to attract older cohorts on the platform. Right now, you have 60% of the audience less than 25 years old, and the engagement is pretty strong in that segment. But we are yet to see how they're going to get the rest of the community on board. So it'll depend on that, really. But if they are able to just focus on their strengths, then they can potentially become the de facto standard for brand advertising for the youth.
Interesting. All right, Jitendra Rawal, our Bloomberg Intelligence analyst. Thank you so much, Jitendra, for breaking it down. Coming up, we'll take a look at the top tech news of the week, including the latest on Samsung and Twitter. This is Bloomberg. It was a busy week in tech, from Samsung seemingly on the rebound, with the company saying its earnings would grow in the third quarter despite the recall of its flagship Galaxy Note 7, to Twitter reeling from reports that its prospect for a takeover offer are dwindling, and everything in between. We've been talking about it all week long. It's been fascinating to watch. So here to recap the week in tech that was, Bloomberg Technology's Mark Gurman is with me here on the set. So Mark, let's start with Samsung. And obviously this Note 7 debacle has become much more serious than we thought initially. Where do we stand at this point?
Well, it's actually kind of surprising. I thought we were past this. Samsung said they were going to come out with a replacement program. They came out with the replacement program at the end of last month, toward the end of September. But it really came together really quickly, we noticed. So within a 2-week period, they were already issuing new models, new software updates, but it didn't seem like they put the time in to really understand the problem. And here we are, only a few weeks later, and a Southwest flight was delayed earlier this week because someone claimed that their Note 7 exploded or was catching fire or getting, smoky before the flight. But the wrinkle there is that this is one of the replacement units. So it's...
What has Samsung said about this at this point?
I mean, they haven't really said much. They still are saying they're investigating the problem. They're investigating if this was actually a replacement model, and they really haven't come out and admitted it yet.
What about carriers?
Carriers are investigating what they're going to be able to do with this phone in the future. It's really interesting to me. How are carriers going to test their phones in the future based on this problem? It really opens up the door to carriers putting more attention into the phones they're going to put under their brand.
It's also interesting. It hasn't really affected shares that much. Investors don't seem too concerned.
There's a lot of lock-in on the Android platform and the Samsung platform, storage of music, contacts, and such. And I think investors think Samsung's going to rebound whenever they come out with a big new phone.
Shares are up. What about Google? I mean, Google obviously unveiling new phones this week. Apple just showed off just unveiled the new iPhone. So the competition is only getting more heated.
Google should have taken more advantage of this situation, but of course, hindsight is 20/20.
But they're partners as well, because Samsung is built on Android.
Right, it's a fine line, but what I mean by that is the Google Pixel phone is very limited in terms of its launch scale. It's not out yet. The street date is October 20th, so 2 weeks from now, but it's only going to be a Verizon Wireless exclusive. It's going to be unlocked. If they really were anticipating Samsung's Note 7 problems blowing up even more, I feel like they would have put it out to more carriers around the world. Right now it's 6 countries, India coming in a few weeks after the 20th launch, so I think they would have made it a bit bigger of a deal if they knew this was going to happen to another Android OEM.
All right, our Bloomberg Tech reporters Sarah Fryer and Eric Newcomer also with me here on the set to continue going through what happened this week. It's not been a great week for Twitter, Sarah, and you've been reporting out that Disney and Google are now out of the running. They're not interested in bidding for Twitter, which leaves Salesforce on the table. Where are we now?
Now we are just waiting to see if these bids actually come in. Twitter's definitely...
Is it just one bid we're waiting for from Salesforce, or are there others?
Have been conflicting reports. CNBC reported today that there may still be multiple bidders. Rico's been reporting that people are dropping out. We've heard mixed messages from Benioff just publicly speaking about whether he likes Twitter or not. He's been very coy.
Mark Benioff, the CEO of Salesforce.
Yes. And really, what this week represents is 1 year since Jack Dorsey took over at Twitter, and it seems that he's losing a lot of control over the future of the company. His board wants to explore a sale. He wants to figure out these live streaming deals, but meanwhile, quarter after quarter, Twitter just hasn't shown growth.
Does this work in Jack's favor then? Because he, at least as we understand it, we believe he does not want to sell the company, correct?
Absolutely. He would prefer to have more time to prove himself, of course, but if Twitter doesn't get a bid, then does Wall Street get less confident in their future? Do they start trading down the stock? Then maybe in the future, Twitter gets acquired for a lower price. So that doesn't look good either. They have to kind of balance all the options here, and some of these bidders that say they're not bidding now or imply they're not bidding now, maybe we'll see them come back later.
Right. All right. Well, these stories and much more are highlighted in Bloomberg Technology's new newsletter, Fully Charged, where our tech reporters provide analysis and perspective on the business of technology. Eric, you wrote this week's edition of the newsletter. Yes. Always love hearing your more opinionated thoughts. But talk to us a little about what we can expect. I know, in this particular version of the newsletter, you asked influencers out there for a single number that tells a story of the future.
Yeah, it's called Fully Charged. Right now we're doing it twice a week. I'm bringing it home every Friday, sort of give us a wrap up, and like you said, sort of get a reporter's look at, I cover a lot of Uber, Lyft, Airbnb, so sometimes it's inside those companies, sometimes other companies. And this time we're looking, I talked to a bunch of, Doug Leone at Sequoia and a lot of insiders about what they thought the next decade might look like.
For example, you've got a quote from Sam Altman, president of Y Combinator, saying, for the past 10 years, the federal funds rate has been around 0%. None of us have any experience to draw on for what this means long term.
Yeah, I mean, there's been a lot of cheap money in Silicon Valley, so I think everybody here is willing to admit that and wonders what the future will look like going forward.
Bill McGlashan of TPG, people are about to be born who will live until they are 150 years old. Wow, that's good for my kids, with a reasonable quality of life, shifting the way we think about staying healthy, wealthy, and entertained. Demography is destiny.
I love this one because Bill's like a financial dude. He's not one of the crazy tech futurists here. But it's just sort of the realization that if people live longer, how do we think about the companies we invest in, and how do we strategize in terms of what's valuable? And so I think it was interesting.
And lastly, Leah Buskey, founder of TaskRabbit, saying today 34% of the U.S. workforce is made up of freelancers. The future of work is changing, and new technologies are being leveraged to support this new and flexible workforce. Regulations get changed.
Yeah, all the answers were surprisingly attuned to the labor changes in the United States and how that was affecting, business, and also just the human beings that technology is affecting. And obviously Uber's built on the independent contractors, and Leah Busk's old company, TaskRabbit. So I think that's something we're all watching. All
right. Well, you can sign up for the new newsletter, Fully Charged, on our new website, Bloomberg Technology. See the stories of all of these great reporters and the musings of Eric Newcomer. Thank you all, and happy Friday.
Thank you.
All right. Now, Bloomberg's in-depth coverage of the 2016 presidential debates continues Sunday night with the second official showdown between candidates Donald Trump and Hillary Clinton in St. Louis. Bloomberg's John Heilman and Mark Halperin of With All Due Respect kick off special coverage 8:30 p.m. New York time. Join us on Bloomberg Television, radio, and streaming on Twitter. Just follow @BPolitics. This is Bloomberg. All right, we've got some breaking news now. New developments in this Samsung recall. Bloomberg now reporting that AT&T is considering stopping all sales of the replacement Samsung Galaxy Note 7s over concerns about safety. As we know, as Mark Gurman just reported, there was a replacement phone that started smoking on a Southwest plane. That plane had to be evacuated. This is a very significant development if carriers start deserting Samsung and dropping these Note 7 smartphones. Again, you just heard Mark talk about how Samsung hasn't said very much about this, so we're still waiting for some explanations. But again, AT&T considering stopping all sales and replacements of the Galaxy Note 7. They will offer alternative smartphones. We'll have to see if indeed AT&T does this and if other carriers follow. Now to another story we are following. A patent battle between Apple and Samsung has made its way to the U.S. Supreme Court. Apple is claiming financial damages from Samsung for allegedly violating the iPhone maker's design patents. A ruling from the Supreme Court could put a final dollar amount on what those damages are worth. Earlier, a federal appeals court upheld an award of $399 million in damages against Samsung. Assigning value to design work is an issue the tech industry is increasingly interested in as the smartphone market matures and customers become more price sensitive. Arguments will be heard on Monday. And that does it for this edition of Bloomberg Technology. Monday, we are talking to Twitter co-founder, now Jelly CEO, Biz Stone. And a reminder, check out our new website for everything you need to know from around the world in tech, powered by our 12 international bureaus, Bloomberg.com/technology. Have a wonderful weekend.